Hello, welcome to Invest Niger. My name is Tom Princeville. I'm a certified securities and investment specialist, and I've been investing for the past 2 decades. So in the course of this particular presentation, I would like to talk about the fundamental analysis of Chams Holdings Company, Chams Holding Company. So Cham actually is into the provision of data services, like services like the BVN, NIN, and other related, services of that nature. And they are also into ICT. The company is in the ICT sector of the Nigerian stock market, and actually we want to take time to carry out to analyze the company's fundamentals so as to determine the company's suitability or not for your investment portfolio. So let's start with the company's revenue. As you could see on the table there, the company generated a revenue of 14.841 billion naira as against 17.494 billion naira. 14.841 billion naira as against 17.494 billion naira, representing an increase of 17.87%, 17.87%, as an increment in the company's revenue. Then for the gross profit figure here, there was unfortunately a decrease of 13.13%. So the company, gross profit dropped from 4.358 billion naira to 3.786 billion. Okay, 4.358 billion naira to 3.786 billion naira, representing a decrease of about 13.13%. So as for the company's operating profit, the company recorded an increase in operating profit of 14.76%. 14.76% here. That is, the operating profit jumped from 1.172 billion, 1.172 billion naira to 1.345 billion, 1.345 billion naira. Then for the profit before tax, we observed that there was a marginal increase of about 6.06%, and the company's profit before tax climbed from 856.734 million, 856.3 from 734 million to 804.804 million to 804.804 million naira, representing an increase of 6.06%. We come to the company's profit after tax. For the profit after tax figure here, we discover that there was a commendable and remarkable increase of about 54.86% in the company's profit after tax, from 391.055 million, 391.055 million to 605.575 million naira, 605.575 million naira, representing an increase of about 55% approximately. We now want to consider the company's earnings per share. Well, the earnings per share here, as you all know, is very, very important. It is the value that determines the level of dividend the company can pay out, as well as it's a very important controlling factor of the nature of share price increase you will have in the future. All right, and so in this case, the company generated an earnings per share of 9 kobo, here. All right, this is 9 kobo as against, this is 0.09 kobo as against 0.1 kobo. All right, 0.09 kobo as against 0.1 or 0.1 kobo. So that gives us an increment of about 11.11%. 11.11%. Then for the company's share price, the current price is 4 naira 20 kobo as against 2 naira 30 kobo. for the year 2024, giving us an increase of 82.61%. 82.61%. It means, in layman language, if you had invested ₦1 million in the company, you will have about 830,000 naira as your profit. All right, approximately 830,000 naira will be your profit in the company. Or if you had invested maybe 2.3 million naira as at last year, that will give you 4.2 million naira this year. That is it. That's all about the profit and loss aspect of our analysis. We now want to consider the cash flow statement as well as the balance sheet to see precisely what surprises, so to say, the company has in store for us in that segment of our analysis. So let's look at it very well. This is a concise, kind of precise, summarized, bare bone, skeletal version of a typical company's cash flow and the balance sheet. So the cash here is 6.0 billion. This might represent cash in the bank, cash at hand, and probably cash equivalents. All right, giving us a cash position of 6.0 billion naira. And not only that, the company has shares outstanding here is 5.0 billion naira. Sorry, 9.0 billion naira is the number of shares outstanding. This particular parameter here, the smaller the better. If you reduce this share outstanding by half, let's say is 4.5 instead of 9, you are going to have an automatic increase in the earnings per share. The earnings per share will jump by about 50%, here as well. And not only that, the market capitalization is 37.8 billion. This is obtained by multiplying the company shares outstanding by the company share price. When you multiply this particular company share price here, 4.420 kubo, by 9 billion, you're going to obtain 37.8 billion naira. We now consider the company's equity. Equity simply means the shareholders' value, or the difference between the company's total assets minus its total liabilities. That will give the company's equity, and represented here, is given as 18.1 billion naira. Okay, so for the equity per share, you simply divide the equity here by the number of shares outstanding, and that will give you 2.01, or 2 naira 1 kubo, 2 naira 1 kubo. Okay, and so we want to also look at the company's PE ratio. The PE ratio essentially is the ratio of the price all over the earnings per share. When you divide the price by the earnings per share, you will get the PE ratio. And what's the price here? The price is 4 naira 20 kubo. So multiply 4 naira 20 kubo by the earnings. This is the earnings. When you multiply this by the earnings, you will get 42. You get 42. So what's the essence of this particular value? It's telling you how cheap or how expensive the company is in line with other companies in the same sector and also in the overall market. Okay, so it also means that you are buying each 1 naira unit of earnings obtained. You are buying that 1 naira unit of earnings for 42 naira. It's like going for shopping, and you come across an item that is supposed to be selling for 1 naira, and they're selling it for as much as 42 naira. So it's telling you that this company is very expensive at this magnitude of PE ratio. The company is expensive, and so that is all about it. Well, can I buy this company? Can I make it part of my portfolio? No, I wouldn't, because not that the company is good actually. The fundamentals there are somewhat moderately okay. I wouldn't buy it because I have an opportunity of buying better companies than this in the market. Okay, So buying this, you need to consider the opportunity cost. Why not put in something better? All right. That's the reason why I wouldn't consider it as part of my portfolio. But if you want to buy into this company, you can make it maybe 5% of your portfolio. It's still okay. All right. So by not buying it is a personal preference. If they say one man's meat, it's another man's poison. You may choose to purchase it, for your portfolio. It's still okay if you can, bear the risk associated with buying into company with this level of PE ratio. Please like this video and subscribe to this channel, and don't forget to share this video. And so somebody actually responded to an interviewer in the US, I believe, and the person was able to classify investors into three categories, as market participants into three categories. He spoke about the top 5%. The top 5% represents the huge pension fund administrators, the huge mutual fund houses, the institutional investors, the smart money with talented employees, experienced staff, you know very, very bright individual working for them. So they constitute the top 5%. And then we have also the middle 15% that diligently follow the top 5%. And then you have the remaining the bottom 80% who are also aspiring to eventually get to become parts of the middle 15% who are following the top 5%. So my hard desire actually is to provide education of this nature, so that we can lift ourselves from the top the down 80% to climb up to the top 15% by God's grace. So that's a commitment I've undertaken to help ourselves, help one another to be able to get to that top, the middle 15%. All right. And so I'm providing a service of that has to do with portfolio management, to manage your portfolio by recommending stocks, buying them for you, running the portfolio, doing the normal rebalancing as the need arises, for you to be able to obtain a better return on investment, in your portfolio, and to be able to optimize your capital at the end of the day. Please, if you are interested in my portfolio management services, you could contact me on this number, so we can work out, an arrangement that will actually be to the benefit of both of us. So I'm looking forward to hearing from you. Thank you very much for watching.